Hi everyone, welcome to another honeystocks.com analysis, and this stock market analysis is going to be on China, the Chinese names, the Chinese ETFs, the Chinese Asian equities market. Now, before I do the usual and of course dive over into the charts, present some data, let me just be the first to say I understand that China has been a complete nightmare, I'm guessing, for many of you that have been invested in China over the last few years. I understand that many of you will be looking at the names and saying, never again. And I completely get it, I understand. I have been there in the past. For disclosure, I have had no exposure to China for around 3 years. But the data that I'm about to present is making the case and arguing is the Chinese, massacre, let's call it the Chinese massacre, the equities, are they now putting in a tradable bottom? Now, for many of you that are perhaps back holding, this could be potentially good news. For those of you that are maybe looking to move in on some of the better companies, shall we say, the juggernauts that we all know, the Alibabas of the world, etc. You'll probably find this quite useful. So I think rather than ramble on, I'll dive into the charts. I did put out a couple of charts to Twitter yesterday, just making the case. Now, as I record this on the morning of the 24th of August, you can see that overnight there have been substantial moves in some of the names. As I said, I did call this yesterday, but I did want to put this out to social media for those of you that are obviously liking the Chinese names, etc. So let's dive into the charts, let's dive into the data, and let's see what the market's telling us. Okay, so first chart that I want to talk about is the Hang Seng. Now, as we can clearly see with the Hang Seng, back in January 2021, there was a bearish divergence. Now that's an early warning signal, and then of course, using the magical hindsight indicator, we can see that various warning signals where we've got levels acting as resistance, and then of course we start to get the 20 SMA acting as resistance. That tells us that we're about to enter a bit of a downtrend. That's a problem. Now, in the same way that we can pick up early warning signals using divergence for declines, we can use the same rationale to find bottoms in the market. Now, bullish divergence in of itself is not a guarantee that it's a bottom. We can quite easily find that the downtrend continues and then, it catches everybody out, and that's why, if you are looking to pick up bottoms in an area of the market or an individual stock, you have to understand the downtrend can absolutely continue. So for me, it's very, very important to have the parameters in place to manage risk. What managing risk looks like is there has to be a point where you say that your thesis is incorrect. And of course, given that we're dealing with China, with the headline risk that's attached to it, there has to be a point on any given stock, ETF, whatever way you want to express a bullish thesis, there has to be a point where you say that you're wrong. Now, for me, as soon as you start to undercut previous lows, that tells me that there's an issue and the downtrend is likely to continue. But in my opinion, the Hang Seng is starting to show signs of life. Now, if we compare the Hang Seng, I guess, with the All Country World Index on a global scale, we can see the relative strength has just been absolutely destroyed. There's no relative strength whatsoever. That means it's underperforming the global marketplace, and I would argue that investor sentiment is probably at an all-time low. That tends to be a good point to buy. So I think there's, a convergence of data that's starting to present itself, and I think the Hang Seng is potentially putting in a bottom. Now let's flip it over to Shanghai, the Shanghai Composite Index. We can see that on the 28th of July, we've hit a support level for the index, and we are chopping about in a bit of a sideways range at the moment. We might want to call it a triangle pattern, but if we can break out of this pattern, that would give me more confidence again that China is starting to move higher. Now, let's look at the individual ETFs. Now, the KWEB China Internet ETF, which I'm sure 90% of you have exposure to if you are invested in China in one way, shape or another, we are down 58.5% from its February highs. Now, of course, that's a crash. Now, again, when we take away the headlines, which all good market analysts should be doing, when we remove the headlines and we look solely at the charts, again, we look at KWEB, the China Internet ETF, and it's putting in, again, another bullish divergence. Again, just to reiterate, that in of itself is not enough to justify, going balls to the wall and, throwing all your capital into China. I think it has to be a systematic approach. I would never advocate, going all in. But if you want to maybe start looking at some of these names and drilling it down to the individual stocks, maybe some of the ETFs might be appealing where you can define that risk. This is the China bullish ETF. This has been discussed with one of our clients this morning. Just clear support level, bullish divergence. Where is your thesis incorrect? Well, it's incorrect if you start to break below these previous lows. When we look at a couple of individual names, again, we can look at something like JD.com, put in a massive failed breakout above $100, then it just started to decline. Where is it finding support? Well, for me, it's finding support at a very logical level. This is the 161 Fibonacci extension level that I'm using from the June 2018 declines. And again, we can define the risk. You're bullish above 61, below 61, all bets are off. You look at something like JDS, again, putting in the same type of setup, same type of characteristic, very easy to define the risk. As soon as you start to undercut previous lows, the downtrend is continuing. And then we can look at something like Pinduoduo. Again, it's actually holding up relative to the KWEB ETF, bullish divergence. And of course, we've got something like Alibaba, which is in a massively oversold condition at the moment. So it is due a bit of an oversold bounce. I think as I record this pre-market on the 24th of August, I think Alibaba's up something like 4 or 5%. So it is putting in a bit of an oversold bounce. But I think what will, of course, give us a better indication if this is going to be a sustained rally or if it's going to be a sell into strength. I think Alibaba is going to be one of those stocks that you want to watch very, very closely. I think if it really starts to get momentum and starts to kind of break out above these trend lines, etc., I think there's a little bit more safety with names like that. So, do your own due diligence, figure out, what your own thesis is. Never act blindly. It's not investment advice. Do your own due diligence and so forth. If you have got some value from this, feel free to go and jump onto our website at honeystocks.com. We provide technical charting research to professional and retail investors, money managers, and we've got a lot on offer there. So go and check out our website, and best of luck with the markets. Thanks as always.